It's been a running theme on this program. We call it the retail ice age. Bricks and mortar companies in serious trouble. I don't see malls bouncing back anytime soon, do you? Bob Knakal is with us. He's the guy from Cushman Wakefield who tries to sell these ghost malls, don't you?
Well, so we sell all kinds of
I know. Okay. What do you make of this? That we've had a guy on the program earlier today, that the retail industry is at a rock bottom and it's going up from here. I guess you'd like to hear that.
Well, Stuart, I think it's a little dangerous to paint with a very broad brush what's happening in the retail market. Some aspects of the market are definitely facing headwinds and have been challenged. Other aspects of the retail market are still doing okay.
So ghost malls are in trouble, aren't they? I mean, you sell commercial real estate, you rent commercial real estate. That's what Cushman Wakefield does, and you're the biggest in the business. I mean, you're big guys in this. You've got to have trouble with ghost malls, haven't you?
Secondary and tertiary malls will face some headwinds.
What's that mean? What's a secondary and tertiary mall?
Well, malls that don't have the most prime tenants or may not be in the best of locations, but that's a natural cyclicality of real estate. Those malls probably will be repurposed. There's going to be a shift in the way space is used and what the potential zoning of those properties could be. So there could be changes significantly made to those.
Okay, now the secondary and tertiary malls that you're talking about, rents must have plunged there, surely.
Well, they're down, as they are in retail generally, yes.
Plunged. You admit that?
They are. In certain malls, there's a problem.
Bob, it's like pulling teeth. I mean, they have plunged. Rents have plunged. There are ghost malls all over the place. And I don't envy you trying to fill them up.
No, well, Stuart, you know, really, if you look at commercial real estate on a broader level, we're seeing reductions in residential rents, in office rents, in retail rents, and that's just the natural cyclicality of the market. But things get reset, they get readjusted. We've seen some correction in values, and tax reform is something that could help the commercial real estate market very, very significantly.
What's the best thing about tax reform for you? I'm talking about retail rental space, like the ghost malls. What's the best thing in tax reform for that group?
Well, I think generally to get retail going, we need stronger GDP growth, we need stronger economic activity, and the thing that can really make that happen is the reduction in tax rates. If we take rates, particularly on LLCs, which is how most real estate is owned in the LLC form of ownership, and for small businesses, lower tax rates will give more money to the folks who own those businesses, and they're going to reinvest that money back into their companies.
Okay, that's the good side. I take it that the last thing you guys want is a border adjustment tax. That would really nail the retail industry, wouldn't it?
Well, that would create another issue for retail, no doubt about it.
Create another issue? It would kill you.
It would be harmful.
Come on,
it would be harmful.
But that's
we
as far
have
as
to
you'll
see
go.
that, no, but there
would kill you.
There are a number of things in tax reform that actually could be very, very beneficial to the commercial real estate market.
You're avoiding me on the border adjustment tax, and you know it.
Border adjustment tax would not be great for us.
Not be great. That's the understatement of the decade from Bob Knakal at Cushman Wakefield. Bob, you're all right. Thank you very much for joining us.
Thanks, Stuart.
Appreciate it.